Hi and welcome to the Core Finance Master Investor Show. My name is James Faulkner and I'm the editor of Master Investor magazine, and I'm joined by Victor Hill.
Good afternoon, James. Always good to see you.
Good to see you, Victor. You've been gallivanting around Australia and New Zealand for a while, digging up some investment ideas.
Well, I have. You've seen the article, pictures of kangaroos on the cover. Of course, we never do cliches at Master Investor, do we?
That's right. Australia and New Zealand, they're not really areas where private investors would really normally venture into. And that's a bit of a shame because the performance, the economic performance and the stock market performance of late has been really, really good. So
yes.
Why do you think investors aren't actually, picking up on this?
Well, I think that's right. I think that Australia and New Zealand are too often off the radar for most investors and indeed for most professional fund managers. And I guess one of the issues is that it's a very long way away. But as I said in my piece, increasingly, in a digital age, geographical proximity counts for less. We have instantaneous digital communications, and increasingly it's easy to get there. I mean, you can now fly on Qantas Airlines from London Heathrow to Perth in 17 hours non-stop. So, it is a long journey, but it's increasingly very much attainable and accessible. Now, these two countries have the characteristic that they have been growing very, very consistently for a very long time. In fact, with Australia, you really have to go back to the early 1970s and the first oil shock, which actually precipitated a serious banking crisis at the time, before you can identify a recession. And so that's over 40 years of solid and systematic growth, with that growth varying between 2% and 4% in the main. So very, very impressive track record on the growth front.
Currently, and that performance has been reflected in the stock market as well.
Well, it has. I mean, in the case of Australia, you have a very significant international capital market and a very significant exchange in the form of the Australian Stock Exchange in Sydney. And this is a market with a capitalization of around $1.3 trillion. It has about 2,200 securities listed on the exchange. It's probably the second biggest after Tokyo in the Asia-Pacific region, and it's a very active and liquid market. Partly this is due to the fact that the Australians for some time have had a compulsory superannuation system whereby everybody is required to put money in a personal pension pot over the course of their career. So and that's had a major impact. The Australian dollar is one of the most traded, I think it's the fifth largest traded currency in the world globally, and the Australian dollar US dollar pair is one of the biggest pairs trade in the FX market.
And that stands in stark contrast to the New Zealand market, which is quite illiquid and relatively small in
well,
comparison.
It does. I mean, New Zealand is only 4.8 million people. That said, the population is growing rapidly, but it's not expected to grow as much in the next 5 years as in the last 5 years. So it's like 1/6 of Australia in terms of the population size, and in terms of the economy, it's more like 1/8. But when you look at the stock market, the market capitalization is just 1/13. It's under $100 billion. So it is a small market. It's probably comparable to something like the Tel Aviv market, with less than 300 quoted entities on it. And of those, some are deciding to decamp from New Zealand, from the exchange there, to Sydney, because they feel that they have a better chance of being prominent and of getting their stock traded by the large investment funds. There's also a tendency in New Zealand right now that instead of listing on the local exchange, a lot of companies are taking the private equity route. And for that reason, the number of listed entities on the exchange has actually been in decline in the last couple of years. Then you have an additional factor, which is that the market structure of the New Zealand, the Kiwi Stock Exchange, is slightly unusual. It's a two-tier structure, with most of the trades taking place between brokers off-market. And that gives rise to accusations of a lack of price transparency and a lack of liquidity, and indeed increased volatility. So of the two markets, the Australian market is definitely the one that has more appeal for professional investors.
Okay, and which sectors and industries does Australia have particular expertise in?
Well, Australia is a country which is very rich thanks to its national resources and its fantastic human capital and its huge scale. It's as big as the United States of America minus Alaska. It's a big country with a lot of resources in the form of metals and coal and oil and so forth. And you might say that the bedrock of the Australian economy is mining. And of course, there are a few household names like BHP Billiton and so forth. The manufacturing sector is very small. The last Australian motor car was manufactured, sadly, last year, and there aren't likely to be any more, at least for the foreseeable future. So all vehicles, all the automotive industry is imported mostly from Japan and Korea and elsewhere. Of course, there's a huge service sector, there's a huge financial sector. Australia is an enormously vibrant and creative country with huge activity in the arts. Food is very important. Taken between the two of them, Australia and New Zealand are really the larder now of Asia. And I was told that really they can't produce enough meat to meet export demand. I mean, whatever they produce will be bought instantly by upcoming countries such as India, where meat eating is increasing, the Middle East, of course, and China and Japan.
Okay. For a private investor then, what's the best way to get exposure to the market?
Well, that's a good question. You see, most Australian companies are already diversified into New Zealand because they regard that as their backyard. The regulatory and legal system is almost identical. There's no language barrier. There's freedom of movement between the two countries. They're extremely closely interlinked. There is some degree of currency risk because the New Zealand dollar has proven to be slightly weaker than the Aussie dollar, but that works in the Aussie's favour. So given that all the big Australian retailers like Wesfarmers, Woolworths are already heavily into New Zealand, the largest airline in the New Zealand internal market is an Australian airline, Jetstar. It's best to buy the Australian entity and then to profit from its New Zealand activity. So therefore, what I'm recommending for the moment is to go the way of a large diversified Australian equity fund, such as Pegasus, which I mentioned, which had stellar returns last year. It was in excess of 20%.
Okay. And any particular companies for investors who like to stock pick?
Yes, I think if you like hotels, there are quite a few things going on in New Zealand. Don't forget there's a few very interesting design-oriented New Zealand firms, of which Kathmandu, which is listed on the Auckland Stock Exchange. That's the outdoor clothing manufacturer and retailer. And they're now diversifying into America. They've just bought a major US footwear manufacturer, which gives them a massive distribution network within the United States. I think that's one to watch. That company is a good example of the overflow between New Zealand and Australia, because actually its CEO works out of Melbourne, okay. Even though the company is actually a New Zealand company. Looking at Australia, there are all kinds of interesting opportunities coming up. I mentioned Redflow, which is a penny stock. I mean, I think it's trading at the moment at around 14 Australian cents. But they appear to have some proprietary technology in the field of lithium batteries. Okay. And it's backed by a guy, Stephen Hackett, who's had an amazing track record of setting up high-tech companies, of which the largest internet service provider. So he is a serial entrepreneur, and the fact that he's behind it is probably a good sign. So that's worth a look. In the energy sector, look at Sundance Energy, which has just taken over a franchise in the Texas shale belt. which could be a very interesting opportunity to very rapidly increase their size.
Okay. What are you writing about next month, Victor?
Aha, well, we're going to be looking at technology once again. And as you know, James, there's been an awful lot of controversy about Facebook and to a lesser extent Google and all the things that they know about us. All of our most intimate secrets are somewhere within their servers. And should we trust them with this information? Or in fact, should we be more concerned about governments getting hold of this information? I mean, who would you rather trust with your personal data, James? Mark Zuckerberg or Vladimir Putin?
And of course, we've got nothing to worry about, Victor, because we've got no skeletons in our closets.
Oh, not at all.
Thanks very much. That's all we've got time for today. I'll be back next month. You can read the full magazine at masterinvestor.co.uk. Thanks for watching.
Thanks, James.